does provide us an opportunity to both look back at how far we've come, and we've talked about that, but also to look forward and to set our sights on new horizons. And the PRI and its mission of promoting responsible investment has come a long way in the past 10 years, as we've talked about today. And there really is so much to be proud of. And I know that I feel immensely privileged to work at the PRI and to work with so many wonderful people. And I really would like to take the time to acknowledge all the people who've made the PRI what it is today. I'd particularly like to acknowledge our board members, many of whom are in the room today, those that are present board members and those that are past board members. I'd also really like to thank our signatories because, as Martin says, we're really nothing without our signatories. But in particular, I'd like to thank the many hundreds of organisations who participate in our working groups and on our advisory committees and really lend their time and expertise. We're a small organisation. We couldn't do the things that we do without so much input from our signatories, and we're very lucky as a membership organisation in that regard. I'd also really like to thank our UN partners who really inspire us, I think, to be all that we can be, and remind us that investing has to be connected with the real world, that capital needs to be productive, and it needs to benefit society and incorporate sustainable development, as at the end of the day, an economy and investment markets are only a part of society, and they should work for the good of society as a whole. As why would we really want to see our money invested in a way that harms us? And of course, I'd also like to thank our staff, both past and present. There's many of them here today. I think that people move from the four corners of the world to come and work for the PRI initiative. And the organisation is really, really fortunate to have so many great staff to work with. Yet, as we celebrate the 10 years, I have to say, and that's really what we're here to do today, I have to say that as the Managing Director of the PRI, I can't really help but be overwhelmed sometimes by how much is yet to be done and the enormity of the task that we all have ahead of us. Because I think that indeed many people would argue that in terms of impacts, as James has talked about, and outcomes, that responsible investment has really only just started to prove its mettle. And I think if we look at the challenges that the world faces, and there are so many, that we really need to step up to the plate and we need to take responsible investment to the next level. So I really want to bring some of this back to the real world economy, and then I just want to talk about some of the things that PRI is trying to achieve over the next 10 years, really to move from getting awareness about responsible investment into getting true impact. So last year, Mark Carney ruffled a number of feathers in the investment community when he said to investors that the challenge currently posed by climate change pales in significance compared with what might come. And he said that the far-sighted amongst you are anticipating broader global impacts on property, migration and political stability, as well as food and water scarcity. And he said, so why isn't more being done to address it? And I think that really is the key question. Why isn't more being done? And the PRI really needs to move in the next decade to think about how it gets more impact, as I've said, and this is what we're doing. We're really trying to step back and think deeply about how we can create not just awareness, but create real impact in markets. And more importantly, to see capital start flowing into a sustainable economy. And investors have really had no shortage of reminders of the risks posed by poor corporate governance. Shareholders in Volkswagen saw the value of their equity almost halved following the emissions scandal that engulfed the car company last September. Corruption at Petrobras has contributed to a near 80% slide in the share price since mid-2014. Pharmaceutical giant GlaxoSmithKline has been repeatedly rocked by bribery scandals. And it was poor corporate governance at the end of the day, poor corporate governance in the finance sector, that precipitated the global financial crisis. And yet, despite the great destruction of shareholder wealth, that's been brought about by poor corporate governance, many institutions have really opted to remain silent in, the cases of crisis after crisis and scandal after scandal. And in today's rapidly changing world, this makes, to me, the responsible investment agenda more urgent than ever before. And I think that, the world as we know it is changing rapidly, and it's changing in some pretty dramatic ways. And the pace of change that we're seeing is also unprecedented. We're facing some major demographic and structural shifts, and these will affect the economy, they'll affect investment markets, and they're going to affect all of us as global citizens. We find ourselves today with a growing and ageing population, a population that will reach 10 billion by mid-century. And this growing and ageing population is consuming resources, and it's taking over habitat at an ever-alarming and unsustainable pace. And the overuse of these resources are in part what are driving the growing emissions that we see today and are resulting in the climate change issues that the world is now living with. At the same time, as been talked about on our panel, economic inequality is rapidly increasing in the majority of countries. It's unbelievable to think that today 1% of the population owns 50% of the world's wealth, and that the other 99% of us, unless there's some very wealthy people sitting here, own the rest. And tax avoidance and tax evasion are some of the biggest drivers of inequality in the world. And as we've seen over the past year, the issue of tax transparency is increasingly in the headlines. And it's something within the PRI signatory base that is increasingly on investors' agenda. Inequality is also exacerbated by rising differences in pay. And this slide has got US figures, and it shows that over the last 35 years, that executive pay in the US has risen by 937%, while real workers' wages have only risen by 10.2%. Real wages are going backwards in many countries in the world, and this is why the issue of CEO pay is such a hot issue and continues to take up many headlines of newspapers around the world. Then we still have the issue of gender equality. These figures are UK figures, but in the US, women make up just 19% of board positions. And at times on this issue, it seems that the pace of change is just glacial, despite the fact that there has been a lot of investor focus on the issue. Of the 500 largest US companies, 3% still have no women directors, and female CEOs make up less than 5% of large companies in the UK. And this is despite the fact that we know that diversity leads to better outcomes in thinking and leads to better outcomes in financial returns. We're also facing a $1 trillion annual sustainable infrastructure gap. We've got war across the Middle East that is leading to mass migration, and this is obviously causing a lot of disquiet across Europe, and it's in part fueling discussions about the need for the UK to leave the EU. It's causing business and market concerns and a lot of uncertainty, as well as, of course, many human rights violations. It's also leading to concerns about food and water security. And it's adding to deep mistrust in governments. And today we see the rise of real anger in the community and a great desire to see change. Citizens across the US, across Europe, are concerned about their futures. They're concerned about jobs, they're concerned about retirement security, they're concerned about migration, and they're concerned about issues such as climate change. They're concerned that governments are not thinking long-term and that they're focused too much on the short-term issues that get them elected and help them stay elected. And, I live in the UK, but I'm from Australia, so as an example of that, in Australia, in the last 5 years, we've had 5 Prime Ministers. We're just about to go to election again. There is nobody thinking about the long term from government. They're thinking about how do I stay in my job for the next couple of weeks. That's what they're thinking about. And this lack of long-term thinking by governments, and it's not all governments, but it's many, is also why investors just can't sit back and wait for governments to take action and governments to put in place regulations. Investors such as pension funds, many of them are in the room, are investing on behalf of a multi-generational group of stakeholders, and they're often matching liabilities of a 100-year period. And the idea that the issues that I've been highlighting and that others have talked about won't affect their investments just simply does not make sense. Governments are going to come and go, but the pension funds are still going to be there. The long-term investors are still going to be there, and they need to act without having to have governments and regulators tell them that they need to do so. And there is really an increasing demand, as James talked about, for greater accountability and transparency from governments, from leaders of corporations, banks, investors, as scandal after scandal unfolds. The latest being the Panama Papers and all the secrecy around tax and all the tax evasion issues. And that these issues are likely to somehow quietly recede into the background is highly unlikely. These issues all affect investment in the real economy, and as we're all aware, stability in markets is fundamental for well-functioning investments. And I think that, I know that after James's very upbeat discussion, I know I might have painted a bit of a gloomy picture about what the world is facing, but on a positive note, we are seeing some change out there. Things are slowly starting to change, and I think that many of the PRI signatories are really leading the way. And I think that's why we've seen such an amazing growth in the PRI initiative over the past decade, and we're still continuing to grow at a really rapid rate. And I think our signatories are behind an inevitable trend that's gaining momentum, and that there is general recognition by longer-term investors that these externalities are increasingly being brought to book, and they're intruding into both the boardroom and onto the balance sheet. Investor mindset is also changing, and we know as investors, for example, that short-term results should not be the predominant measure as to whether an investment is good or bad. We know that we should have better alignment between the investment objectives and the remuneration of the people who are making the investment decisions. We know that the daily business of trading, buying and selling, endless arbitrage, high-frequency trading, making minute-by-minute and up and down bets, living for today and at best tomorrow, is different from the much, much harder task of creating long-term value for our beneficiaries. And I think we actually do know many of the things that we need to do to build greater security for our financial system, for our economy, and for our society as a whole, which does beg the question about why aren't there more people doing something about it? And how do we really move from awareness of these issues to seeing real action, to getting that impact that James was talking about? And how do we really shift to true ESG integration? And as far as we've come, and we've talked today about how far the PRI's come and how far some of our signatories come, it's really just not enough, which is why the PRI is embarking on a year-long consultation with our signatories to produce a blueprint for responsible investment over the next decade. And it'll look at the issues of accountability to the principles, which was also discussed, systemic risks in investment markets, the PRI's role in addressing those systemic risks. We're going to talk more about ESG integration. We're going to talk about how do we actually incorporate the Sustainable Development Goals into our work at the PRI, but also into investments more generally. How do we measure the success of the PRI initiative over the next 10 years? What metrics can we use? How do we know that we've achieved our objectives? And we're also going to begin a discussion about the principles themselves and whether they need to be 10 years later, do they need to be updated? And a key part of the blueprint will be exploring the PRI's potential role, as I said, in addressing systemic risk in the financial system. And our initial work in this area has really identified, I suppose, four distinct sources of systemic exposure. And the first is the relationship between the owner and managers of capital, which Martin explored earlier. Too often the incentives for managers and long-term shareholders are misaligned to the detriment of owners. And the second is an increasingly delegated investment chain with layers of intermediaries, investment consultants, fund managers, fund-of-fund managers, all inserted between the asset owner and the assets that they ultimately own for their beneficiaries. And this increases cost and it reduces accountability. And we're also thinking about the nature of the marketplace. Advances in technology are making it increasingly challenging for regulators to effectively police markets. They're encouraging types of activities such as high-frequency trading, which encourage short-term behaviour. And externalities in the real economy, the costs of climate change, local pollution, water scarcity and wider resource depletion are still all too often borne by the wider economy and society at large, rather than those who have created the pollution or consumed the resources. We seem to have moved to something where we privatise all of the profits, but we make sure that all of the pain has to be shared around when everything goes wrong, and it's the society that pays and picks up the bill at the end of the day. So to address these exposures, we need to be clear about the type of financial system that we actually want. We need to understand how major social and technology trends will affect the system, which is why the blueprint that we're going to be consulting on will also seek to draft a statement of purpose for the financial system. To come back to, well, what are we actually trying to achieve? What sort of system do we want? And then how can we set about getting that system? And the Sustainable Financial System program that's being run through the PRI and led by Nathan Fabian, who works at the PRI, will engage signatories in a discussion about these system risks and what, if any, as I said, interventions that the PRI can make with our signatories. But I want you to hear directly from some of our signatories about, in their own words, about the issues that they think the PRI needs to tackle over the next 10 years. Action and impact, policy and regulation, collaboration and accountability are all the key themes that are coming back to us from signatories about what we need to do over the next 10 years. And we're really listening and we're responding. Accountability to the principles is probably the biggest single key theme that signatories talk to us about. And we've already begun a consultation on this issue, and we had unprecedented response to the consultation. Over 500 individual organisations made a written submission to the consultation. And whilst PRI signatories want the PRI to remain a big tent organisation that works with both leading signatories but also works with new signatories, people who want to get started about responsible investment, those in developed and developing countries, and big and small investors, there's clear support from the signatory base to delist signatories who do not make or have no intention of making any progress over time against the principles, and those who are involved in clear violation of the principles. Some of the comments we received were things like, the principles should be taken seriously. The PRI offers an abundance of resources to assist those who need guidance. Those who are unable to progress and do not access these should be delisted. And others who were a bit more cautious and said making these types of judgment calls is very complex, but falsifying the annual PRI reporting survey should be grounds for delisting. So we're just about, we're planning, we're looking through all of the information that we got from the consultation. Our plan is in September to be able to come out to signatories with how we're going to move some of these issues forward and have a longer conversation about it. As part of the blueprint, we'll also look at the issue of the principles themselves, as I mentioned. The PRI, of course, believes that the principles are as valid as ever and remain integral to the practice of responsible investing. However, 10 years since they were drafted, the PRI and lots of our signatories recognise that they only cover some of the challenges that we face as Martin said, they're very much about the relationship between the investee company and the investor, and that there's wider issues going on. So again, as part of the consultation, we'll talk about whether we need to update the principles, do we need a seventh principles, those kinds of issues. They could likely focus on, if we had an extra principle, could focus on system risks or focus on the need for more productive capital that's aligned with societal objectives. And we're really committed to running a very transparent process and a very inclusive consultation, which is why it's taking us a year to basically do it. All submissions that are made to this consultation will be made publicly available on our website so that you can read any submission that is made. You don't have to just take our word that this is what people think. It'll all be publicly available for you. We'll produce the actual blueprint consultation paper in May this year, and the consultation will be open to August. We're also running across the world a whole lot of in-detailed workshops so that we can hear directly from signatories about what they think about some of these issues. This is in addition to the things that we've already talked about, the consultation we've done on accountability and a signatory survey that we did asking about a lot of these issues. And the PRI is not taking these issues lightly. The PRI board is really gathering this information so that it can make sure that it's heard from all signatories across the world, big, small, developed, developing countries, and that it can make informed decisions about where we head in the next 10 years. But I think from what we've heard today, we can all agree that we do need to move forward in the next 10 years and take responsible investment to the next level. So finally, as I've said along the way, there is so much more to do. There's so many issues to tackle. We really hope that you will join us as we do this consultation to take responsible investment forward in the next 10 years. We're setting ourselves and our signatories and the wider community a big challenge on this issue, and we realise that it's not easy. But we really want to take responsible investment to the next level. We want to move from awareness to impact. And so just to finish again, I'd really want to have the voice of our signatories about what they think is the challenge to be the last thing that you hear this evening. So thank you very much for coming, and now I'll go to the last video, which is just a